slides. It's literally just going to be a recap of what I went over yesterday in terms of structure-wise, because it was a topic that really, really rang through. And I ended up like moving the lunch break just because we were on the topic of structure, and we just kept running through examples, just pure Q&A, and it was fantastic. So, look out in the next couple of weeks. I'll release some info on what actually happened on the day and stuff. I put a video together, had a videographer come, who's studying photography and videography course, and he said he wanted to do something to do with Forex for his portfolio. So we got in touch, hooked him up, and I'll make sure I link his stuff when I post about it. But on to the presentation, because I'm obviously curious at time. What I will do is we disable annotations. Right. I know it's been touched on a lot this webinar, and I know Raquel will obviously be touching on it after my section, because I believe that will be when you go through different styles of trading, different examples, quizzes and fun stuff that Raquel's got planned for you guys. You can literally trade however you wish. Like, don't listen to anybody else. If you look at me, if you look at Ted, if you look at Raquel, Blue Pips, etc., you can do whatever you want. If you want to use literally just to use EMAs, you want to use trend breaks, like channels, wedges, patterns, triangles, retests, zones, Whitfield's momentum. You can do anything. You can literally do whatever you want. Like, it's not for somebody else to dictate to you saying, this is the be all and end all. If you don't trade with supply demand, or if you don't trade scalps, or, if you don't trade with momentum, then, you want to kind of see what makes logical sense to you. Like, for some people, EMAs just, EMAs don't work is pretty funny, because actually some people just can't kind of relate to, okay, well, this lagging price indicator is telling me when to trade. Personally, it's a great confirm, but you don't want to just rely on indicators. What you want to do is look into what makes the most sense for you. So if there's a topic that comes up today and you say, okay, well, that makes sense. Okay, looking at how Ted or Raquel draws its price levels, that makes sense to me. I'm going to delve into that a little bit more. The chat box is going pretty wild. Okay, right. There we go. I will keep that and go for the next one. But so if a certain topic you relate to better, then you can just specialize in one thing. And yesterday I talked about the rule of one, and it's something I've spoken to many people on Instagram about, many people in like the Facebook group that I jump in with Ted, and every intake Ted has, I say, please add me to the group, because I'm happy to jump in, talk to the new recruits. Hence why I'm jumping on for 10-15 minutes for the Signs 2.0 for Raquel. But the rule of one, if you can do one thing and actually specialize in one thing, you're going to put yourself in a better position, and you're going to be streets ahead of people, because there's so much noise and there's so much expectation of people to be able to trade every single different which way and actually understand the theory behind it, that actually you just get caught up. You end up being a jack of all trades, a master of none. You say, you're looking at charts and say, okay, the EMAs are crossing now, but we're at resistance, and then but hang on a minute, I want to hold for the next high, and then but there's a price zone to the left, and maybe there's a retest coming, or shit, we're coming into supply. Like, you will never be taking a trade. If you're trading every single style, there'll always be a reason why you won't want to be taking that particular trade. Something else will conflict. It'll be a big conflict of the interest. Next slide, right? Let me move the box because I can't see it. Pretty much what Ted talked about. We talked about controlling the market, institutions, etc. So I'm not going to bore you and run over that. What I would stress to you guys is, you want to be seeing the bigger picture. You want to be logical. Just write that down. Just be logical. You might have a notepad next to you. You just want to be logical. They push the price, not you. As retail traders, we're small fish, we're ants. We've talked about this. Ted's talked about this, so I'm not going to bore you with it. But actually, the quicker you understand that your order of, let's say it's worth £500, or it's worth £100, or if it's worth £5,000 in total, in terms of your lots, etc., that's not going to move anything. Like Ted's talking about, it's run by the masses. Like, we are literally just dots. Like, we're so irrelevant. Maybe you want to write that down. My order is irrelevant. So when you keep talking about stop hunts and bits and pieces like Ted referred to, it's not individual. It's not conspiracy theory. Like, I talked about that yesterday, and somebody said, oh, I actually genuinely used to believe that. Like, it's bullshit. It's not real. Like, why would the biggest institution say, okay, right, well, you know what? Oh, that Raquel, I'm gonna get him today. Like, I'm gonna just eat his stop loss. Like, that's just not gonna happen. So just be logical, be relevant, and actually see the bigger picture and understand where you fit into Forex in terms of you're actually just a small fry. In terms of structure, so this is what we're going to go through, and everybody, I would assume, knows about market structure now, but this is something I went over yesterday in quite a lot of depth, did a couple of drawings as well on a flip chart. Not going to go through drawings today because essentially the drawings yesterday were bad enough. Like, pretty much when I'd say I'm going to draw something, stickman is what I kind of have in mind. Understanding structure and understanding how the market actually works. We've talked about how institutions make moves. So what should stick in your head is actually that market has to move in waves. So let's say, for example, you see price pushing up or you see price pushing down. It's never going to be pushing in one direction forever. The quicker you can actually understand that, the better your trading is going to be. Like, I don't think you ever see a currency pair, for example, just completely drop off the face of the earth for months on end. Like, it just wouldn't, just the economy just wouldn't be sustainable. Like, it would collapse. Like, it doesn't make any sense. There's got to be waves. There's got to be highs and lows. Please note this down. So next time that you're in a trade, let's say you're swing trading, or let's say you're scalping, it really doesn't matter. On every single time frame, there's highs and lows. Like, so you've got to realize that, you know, it's pretty easy for me to sit and say, oh, this is a low, this is a high. You know, essentially we're going to be trending either way, or we're going to be moving sideways. We consolidate a shitload of the time, like 70% of the time market's open. You know, our 6-day period, Sunday night to Friday night, we've actually got consolidating markets. Like, not a lot's happening, but just realize that highs and lows are happening on every single time frame. So when you're scalping, let's say, and you're up 10 pips or you're up 15 pips, and then price retraces and you're actually now only up 5 pips, jump into a 1 minute, jump into your 5 minute, you know, maybe even your 15 minute, and understand that there's every single candles are making up different other larger candles, and actually it's literally just highs and lows. So you see retracements, and people are scared of retracements and say, shit, I was up 10 pips and now I'm only at 5 pips, but what I'm going to do, should I close, or should I let it hit stop loss, or what am I going to do, how do I manage it, my stop loss at break even, but this, but that. Like, people just panic. Like, it's panic stations. People are literally, like, I've even spoken to people when I've done like sessions, you know, even with my group, people say, oh shit, well, like, I'm not sure what's going to happen. Like, we're moving up, so it must be a buy. Like, I'm taking buys. The most logical thing you would do is just wait for confirms, like Ted talked about earlier. Wait for confirms and just jump in with what's actually happening. Like, you're going to be riding with the institutions. Like Ted talked about, you get caught, you get spanked. It's simple as that. Like, you're not going to be changing market structure at the end of the day. So every time you're seeing like little retracements, maybe on your small, tiny time frames, or even when you trade in swings or an intraday kind of level, you have to expect that the market doesn't exactly just shoot in one direction. Like, you don't have one massive candle, 300 pips, one massive daily candle, 300 pips. You're going to have your daily candle that's made up of your 4 hours, your 1 hours, etc. And you're just going to have basically high lows, high highs, and vice versa. So there's never going to be that one straight candle. So realize that when candles are creating perhaps lower wicks, upper wicks, it's literally just based on the structure for a different time frame. So keep that in mind. Like I've said, you want to be seeing the bigger picture. It's literally a roadmap. You don't want to be trading based on one time frame, and I'm sure Raquel will be going through this. Generally, you want to be using a couple of different time frames, and then you've got your own, you know, trigger time frame almost. So just because, like I talked about, you might have upper and lower wicks, just because a couple of time frames say one thing, maybe look at a different time frame and say, okay, well, that makes sense, but does this mean that we're going up? Well, not always. For example, you might be creating a wick on a higher time frame or a lower time frame. It might be a low high in the 5 minute, but then actually you end up filling the hourly wick. I got caught in a GJ trade the other day, and that was literally a prime example. I was like, oh, okay, yeah, this is the liquidity wick. And then I jumped into the 5 minute and I got stopped out. I was like, it's literally just making a high low to then push up and make a high high, fill the wick and beyond. And literally it happens. like Ted talked about, losses are part of the game, and even now, like, I'm taking L's. But planned wins and planned losses, I'm sure that's something Rick's probably talked about when I wasn't here. It literally doesn't matter. If your win rates, even 60, 70%, trust me, you're going to be streets ahead of everybody else. 90% of people are actually losing money, like Raquel said. So when he says that he sits and talks to Sinan about, your dad's a winner today, like, that generally is something to be proud of. I'm sure Raquel will talk about momentum, so I'm not going to dive into that too much, but I keep talking about the bigger picture. Literally just take a step back almost and say, what makes sense? Like, are we in a channel on 1 4 hour? Is it making a lower wick on the daily? Like, you can't just be trapped in 5 minutes and 1 minute and stuff. Based on how you want to trade, every kind of time frame is going to have that little bit of noise. The smaller the time frame, the bigger the noise is generally. That's why I could never deal with the 1 minute and stuff. Even if I am scalping, the 1 minute to me is just not ideal. But remember, like I've said throughout this sort of 10, 15 minute slot, market's got to move in waves. So every time you're stuck in a trade now, please refer back to what you've heard me talk about. There's got to be a wave in every single time frame. So if you're scared of what's going on and you see a little retracement, just realize that there's so much more to it. And then the last couple of slides anyway, and then I'll go through some questions. Like Raquel said, why are people trading? In reality, it genuinely is a skill set that you can take anywhere with you. If you want to trade full time, or you want to trade while you're still in employment, you might have a flexible job. You might have a boss that actually wants to trade himself, and he says, okay, well, if you show me, then I'll let you do a bit of chart work. I'll let you have a half an hour lunch break here and a 20-minute lunch break here to monitor stuff. The better traders are like I know and I've met throughout the time in Forex family, etc., whose curves actually been shorter, understand that the more pressure you put on yourself, like, everybody talks about being a full-time trader. Everybody wants to be that full-time trader, but trust me, it's actually not as glamorous as everybody makes out. There's always a point where everyone said, it's always easy to say, the grass looks greener over there, etc. Even if you're in a job, like, if you don't like your job and you think, I'm going to move to a different company because it's going to be great over there, but you don't see the bigger picture. The shorter curve will be the people who have discipline, and they have a discipline from what? They have routine from a 9 to 5 kind of job. They might even work shifts. They might be working night shifts, but they've got that routine. They've got the sleeping pattern. They're getting up at a certain time, do certain things with their day every day. Maybe their weekends are structured, etc. Their learning curve is going to be short because they're going to be happy to put a little time, like a time restraint on things. Again, the reason you guys are here, show me the money. I'm going to talk in the next slide a little bit about expectation, because for me, that's something that's actually come to light recently. And again, realistically, how long we've actually got. So let's say from today, we're on the 29th of April? Yeah, the 29th. So have you got until the 29th of, I don't know, let's say September? Have you got, that gap in, I don't know, is it 5 months now? Yeah, 5 months. Have you got that kind of time to actually sit and say, yeah, you know what, I'm going to process things, I'm going to be learning, I'm going to be trading for your cheeseburger money, I'm going to be trading a smaller account, or I'm going to be trading demo, but realistically, have you got time to allow for this? Like, you don't, if you're on this webinar and you say, okay, Forex has got to work tomorrow, like, the pressure's going to be on and you're going to be making dumb mistakes because trading's stressful enough as it is. Whereas if you've got more things to say, okay, well, shit, it's the 23rd of the month and all my bills are coming out on the 1st and, I'm behind where I should be. You don't want to be chasing things just because you've put yourself in that position. You want to be almost as financially comfortable as possible. And, let Forex become like a residual, let it become an extra thing if that's what you want to do with it. If you don't like your boss, okay, and your trading's got good enough, then go full time by all means. Any questions about that, there's a lot of people you can ask about it, but just be realistic. And then final slide, this is where I will take questions, obviously, after this. This is my final slide. Overcoming challenges. There's a couple of things here that I thought, whilst I was actually listening to different sections on this webinar, I thought, you know what, I'm making a new slide. And literally, I'm thinking, what are your expectations? Are they actually realistic? Like, I'm not sure about, the US and Canada, etc., but I know the UK, and the UK average wage generally is between 20k and at 23, maybe 22. Depends where you live. Certain areas less, certain big cities more. If you live in London, you maybe add an extra 10k. Cost of living is obviously higher. But think about things logically. So let's say there's 200 trading days in the year. So there's what? Let's say you're only trading for 40 weeks of the year and you're making £100 a day. That's still, you're still only making like what, 20k? Be realistic in terms of your expectations. Where do you see yourself flipping your account to the millions? Like, if you've not been gifted anything, like I've never been gifted a shitload of money to say, here's 100k, go and flip it and like trade it for me. Like, I've never had that. So where like the illusions from Instagram have come from, I have no idea. I think your expectations have to be clear. Like, what do you want to get out of Forex? If you're trading it for your living, how comfortable does your living need to be? Like, you need to ask yourself things like that and ask yourself what you're actually looking to get out of it. Are you looking for some, extra beer money at the weekends? Are you looking for, a chance to invest your money to actually say, okay, well, if I continue to make this rate, this is going towards me when I want to move out, or this is going to go towards the family holiday for the year. I can surprise my wife and kids and say, guys, I've booked us to go to Disneyland in a Premier Suite, or whatever. But just have realistic expectations. Like, realistically, if you don't, like, money makes money at the end of the day. So if you have a smaller account, realize money makes money. So, let's say you're trading with 5k. Let's say you're trading with 5k. Think percentage wise of 5k for a minute. Like, just think about where you're going to be taking that in a year. Remember, you're going to be taking losses, so maybe not every day ends in a positive. So maybe you don't make that 1%, 3%, 5% every day. You're always going to have the days where you don't make that, or the weeks you take holiday, etc. You're not going to be trading every single day. So when we talk about the 200 actual trading working days, you might take 180 days because you take 20 days off a year. So just have that expectation in your head from the get-go, and I think you'll already be in a better position. Like I've talked about, you don't know what you don't know. Like, if you don't know something, just ask. Like, if somebody says to me, like, oh, how do you do this? I'd either go and I don't know, I'd either go and find out, or I'd ask somebody that does know, and I'd work out how they know and if they can teach me. Don't be, like Ted said, don't be scared of approaching people. Like, in my Instagram bio now, I say to people, email me. Like, I promise you, if you email me, you will be getting a response within a day, maybe more, maybe less. It depends. Like, we've got busy lives, and if I don't respond to you, I'm either asleep, eating, or doing other stuff. I promise you now, I'll respond to you. So, like, if you need help and maybe you're embarrassed to talk to Ted, or you're embarrassed to talk to Rakil or anybody else, like, there will be no judgment. I promise you that. So if you need help, make sure you're reaching out to people. This is a good one, actually, because I quite like this one. Are you talking shit in groups instead of trading? Something I say to my group is, I'm happy to talk about the weather. I'm happy to talk about the game last night, but let's be serious now. Are you literally just making excuses for why your trading is not going well? Are you saying, oh, okay, well, let's talk about the game because I don't want to talk about the position I'm in, or I don't want to talk about the loss I just took or the win I just took? Come to the group after you've finished. So if you're in Rakil's group and you think, oh, well, Rakil's took buys and Kevin's took this and Alex has took this and Ted's took this, oh, well, I feel like I've just missed out everything. You've played yourself because you're getting involved in stuff where you're not even finished yourself. So make sure you finish your own shit before you get involved. So generally, I might come to a webinar maybe an hour late. I might have been trading myself because I don't want to jump on the webinar and say, oh, Rakil's saying this, but I'm in sales already and Rakil's taking buys, and I'm thinking, you almost get caught in the crossfire of different conflicting ideas, and you think, okay, well, I'll just close that because Rakil's, a pretty firm trader, so he must be right and I must be wrong. Like, it's never going to be like that. So just make sure you get your own shit done and then come and enjoy, join into the community side of things, in my opinion. Groups are excellent as a community and support network, but don't let it distract you from what you're actually here for and actually what you're in Forex for. Last couple of points. Trading in hindsight, it's so easy to say, okay, well, if I'd let that run on for another 50 pips, or I could have done this and I could have done that, why did I close? at that point in time when you closed your trade, you was happy with what you were taking off the table because you'd already put it on the table. You knew what your planned win was. You knew what your planned loss was. Dollar, pound amount, etc., pip amount. Don't get caught in the past. Also, listen to. I recommended this actually to the workshop group yesterday from Chat with Traders, episode 82. 50 minutes through to the end. So from minute 50 through to the end, and like the last 20 minutes, it's by Futures Trader 71. I know Rakil's probably told a lot of people about that. If you want to listen to something specific, talking about hindsight and actually, future outcomes, then you want to be going through that episode. I recommended it to a couple of people struggling on Insta, and it's changed them. And finally, are you actually, what do you want to get out of Forex? Are you mad at taking losses? If you are, your risk's clearly too high. If you've got your daily risk limit, like Rakil says, and you take that daily risk and you take that daily loss and you think, shit, like I'm £50 down, or I'm £150 down, etc. You're not comfortable with that as a person. Your risk appetite is clearly different to what you think it is. So, keep that in mind. And I always think, and I think it was a guy who owns a clothing company in the UK, that I read this on his IG story, that he says to his staff, I don't want you to come to me with a problem if you haven't already got like 3 solutions to present how we're going to get over this. I think that's one of the quotes that actually you can live by. You can complain about your situation, but actually, are you doing anything to rectify it? Are you taking the steps to get past it? If you're trading struggling, what are you doing to make sure you're not struggling in a month's time? And so what I'll do now is open up the chat floor. And Chat with Traders is on SoundCloud. It is on YouTube. Episode 82. But yeah, right. Time for questions. And that is, apart from that, that's my section. So let's open up the floor for questions. Right. Logo suite. Yeah, I had that designed by a company called Smoke Digital, because I know the guy who owns it. That's it, Tony. Thank you very much for linking that. So it's minute 50. 50 minutes in till end. Talks about the fear of attachment to previous outcomes. It talks about really great analogies, talking about Michael Jordan, talking about Lionel Messi as well. So it's quite relatable. What do you think of the new rules coming into force in June? Margin and leverage. You don't need a shitload of leverage. If you're only risking a couple of percent and you're not going full margin, etc., it literally doesn't matter. And also, if your broker's actually not based in the UK, it's not going to affect you too much. But yeah, is there any more questions, Rakil? Is there any questions you got from me? It's time for you to obviously get the show back on the road.
Yeah, it was great. It was really good.
Right, so
I think it's a really good idea to listen to a lot of people's perspectives and the way they see things. But so we have one last person here. He wants to share his experience. His name is Brian. He's from Mexico. He only trades the Asian session, only the Asian session. He trades only the Asian for so long that we asked him, man, why aren't you in New York? And he said, well, I don't want to trade New York, so. This is Brian Chavez.
Hello, guys. Can you guys hear me clear?
Oh, yeah, it's working fine.
All right. Well, good morning to you guys. It's still morning where I'm at. Well, I have to go over just a simple notes that I have down here. I'm not in my office, so I don't have slides or anything like that, but I want you to listen clearly. I have some very valuable information. What I have to go over here is psychology, just a quick psychology over trading. And why psychology? Because I feel that psychology is 80% of your trading. Honestly, anybody could just draw lines. Anybody could teach you a strategy. Strategies are easy. Anybody can learn strategies. There's so many strategies that work, but if your psychology is not right, you're not going to be profitable at all. I mean, you might have a really good strategy, but if your psychology is down the drain, you're not going to do anything. So it all depends. You have to get to a mindset of having a no fear mindset. You're not supposed to be scared of the market. The market has nothing to do with you. You have nothing to do with the market. You shouldn't be scared of the market. And if you are, there is a certain points that make you be scared. how much are you risking? You should be risking only something you're able to lose, like something that's not going to emotionally affect you. If you're risking something that's not going to emotionally affect you, that's going to take you to take the best trades ever, because you're not scared of losing, because since your mindset is in the no fear mindset, then you're not going to be scared. You know what I mean? And that comes from having confidence. But how do you build the confidence? You build the confidence from time. You have to put in the time. You're not going to become profitable from one day to another. You got to put in chart time. You have to practice the same thing over and over again. And that comes from having a plan. If you have a plan, you're going to practice the same thing every single day. You're going to master it. I don't know who I heard this from. I think it was from Ted or something. But he said, are you scared of someone that's going to practice 7,000 kicks, or he's going to practice the same kick 7,000 times? You have to practice the same thing every single day. Don't just look at the charts. Look for the same thing the same thing happens every day, just at different times. You just have to practice it. If you're going to practice, that comes, do not demo. Don't ever demo. Use a small account and use 1 cent lots, but don't ever demo. You're not going to have the same liquidity issues or anything like that on a demo. You have to practice the real feeling of a live account. You're only going to be losing pennies, so what's your worry? Just practice on a live, but the 1 cent account. You know what I mean? Now, what's another thing? I believe, now this is my trading style, but some of you people could apply it. I believe in anticipation, not participation. So if you have your analysis, and this comes from not fearing the market, this comes from practice. Now, if you have your analysis and you're looking at a certain price level, are you going to participate in that move, or are you going to anticipate it? So my belief is that you should take action right when you see your price level being touched. You're either going to take a buy or you're going to take a sell. But I think you shouldn't hesitate. Why is there, hesitation leads to a lot of losses. That leads to you not having the best entries. You see how those people have wick entries? That's because they're not scared of taking a trade. You have to get your psychology right. I'm telling you, strategies are easy. Anybody could teach you a strategy. You have to mentally be prepared to take a trade, and that's how you get the best entries. And that's how people get those ideal entries. Now, if you look at an Instagram post, are you looking at how much money they make? No, look at their entry. Go look at why they took that entry. Go back onto your charts. Don't just look at, wow, he made that much money. No, look at the entry he took and go back and be like, why did he take this entry? It looks so good. Why? Let me start figuring it out. That's how you start to learn. Don't just get on Instagram and look at how much people are making. No, that's not going to teach you anything. Now, personally, I believe you could be a very, very profitable trader if you stick to one thing. Just stick to one thing. I've had a streak. I've had streaks where I've had 10 wins in a row. How do you do that? You stick to one thing. You only trade if you see your perfect setup. Do not trade every single day. If you see it every day, it's kind of weird. You know what I mean? Sometimes you'll have a week where you see it every day, but it doesn't work like that. If you really want to have a winning streak where you're like, wow, I've won 10 trades in a row without a loss, that's because you stuck to one thing and you only traded that one thing and you only saw it perfectly. You know what I mean? Don't start making shit up. And this is this is the only reason I lose, because I start trading what I think, not what I see. And that's a big thing. You have to trade what you see on the charts, not what you start thinking. Sometimes if the charts are telling you it's going to push up and your mind is thinking, oh no, but this is that and that. No. If the charts are pushing up, you better take action with that. You know what I mean? Stop thinking other stuff. You know what I mean? And focus on your own stuff. Do not focus on what other guys are saying. That will also mess you up. Don't do that. If you know your analysis is right and you know that you've done this thousands of times, you've only done that one thing thousands of times, don't focus on what other people are saying. You know what I mean? You just have to be patient, and the psychology part is not something your mentor is going to help. That comes from your personal experience. You can't go to your mentor and tell him all about that. He's going to give you the right tools to succeed, but the psychology part, that's something you have to go through. You can't skip that. That you just can't. And you have to take responsibility of your actions. Nobody else has the fault that you took a loss or something like that. And then losses are good. You know what I mean? Why are they good? Because you learn from them. Why do you learn from them? Because if you have a set plan, that means you took that trade for a reason. So you're going to be like, I took this trade for a reason. Why didn't it work out? And that teaches you a lot. Like, that's how I learned. Like, I learned a lot from a loss, because whenever I take a trade, I take it very planned, meaning that there should be no error. And if there is an error, there has something to be learned. There is something to be learned there. And you just have to mentally get there. That's all I'm trying to say, that if you're a good trader, all good traders here, they're mentally prepared to take the trade. Do not be scared. The moment you lose fear is the moment you start making money. And that's in all honesty. And like Alex,